That's enough. Hey, how you doing? Good morning to you, user. Not a lot of movement this morning at the moment. A couple of bioscience companies moving, but not a lot else. Bed Bath & Beyond had most of its gains from yesterday. Had a bit of a spike up from it's pretty much break even from yesterday. So I had a spike up after hours and then sold off since. So pretty much all this morning it's been selling off. But hey, look, if it turns around, fine, we'll trade it. If not, we'll look for something else. Same with AMC. Same with Sega, Tuckbuilt, whatever. At the moment, the big mover at the moment is Verona Pharma. Actually, buddy, AMTD, it's breaking lows here. It's down at barely over $3 now. So back, it's got a bit of a gap to fill, down to 270, something like that. 264, 265. Got a gap to fill. So it's I expect that to fall further. But yeah, nice one. Luke, I'm in this game for making money, Puno. I'm not in this game to help you out. Sorry, buddy. Me buying AMTD means I'm just going to be another one holding bags along with you. I did tell you to get out. I'm not saying I told you so, but I told you so. But you have to be stubborn. See, and that's a very valid point actually, because you being stubborn like that and holding on to your position is human nature. We're all like that. We don't like to be wrong. So this is why we lose money on the markets, because it goes against us and we don't cut our losses. We're stubborn. We don't want to. Look, I'll hold it till I die, and then you end up losing all the money you put in there. So it goes from $13 to $2. You lose like 90% of your holding. But hey, look, I've been there, buddy. Don't berate yourself too much. It's just one of those skills that you've got to master. And even I, to this day, still find it difficult at times. Just holding on to a loser too long. Where'd you draw the line? Which is why having stops in place is important, because it forces you to draw the line effectively. And this is moving up nicely, but it's not got the volatility I want to see just yet. That can be trusted. Barbecue just popped up. Very low volume. Nielsen. That's going to be an acquisition. You can tell by the pattern of it. Probably 28, something like that. I'll have a look later. And then there's nothing else. Halbers is a bit too cheap for me, but I'll have a look at it anyway. Helbiz has had a good couple of days. Up at $2 now. I'm just having a look at Helbiz there. Helbiz Q2 earnings confirmed in 2 weeks. Helbiz stock, the next big meme stock. That's what's going on here. It's just garnering quite a bit of social media attention. Ah, right, okay. So last Monday, no, Monday before, Helbiz announced partnership with Logan City Council in Queensland, and had approval for a 12-month license for Helbiz to operate over 400 e-scooters and 400 e-bikes starting in late August. So that's probably why it's going mental now. That's from July. So since then, there's not been a specific catalyst as such. Key data: 17 million float. That's only 3.5% shorted, so not much of a short squeeze. Is it a buy? That's up to you. I'm not offering. I wouldn't want to say one way or the other. It's a bit too. It's too low priced for me. I don't like trading these $2 stocks, you know. But do your own due diligence. I won't be trading it. That's all I'm saying. 1,000 likes, user. 1,000 likes. Good stuff. We like that. Straight in. Oh, look, you want to be drinking your Macallan to commiserate. You don't be selling it. What's the point in buying it if you're going to sell it? You keep it for a special occasion or to drain your sorrows. It's not. Anything cheaper? Yeah, Google is your friend, Great Scott. There's a lot more that's a lot more expensive, but like my quick answer to you, and be no disrespect about this, is if you're balking at 150 quid a month, then day trading isn't for you, buddy. That's not the only cost. It costs me about 800 quid a month to day trade, between 700 and 800 quid a month to day trade. So if you can't afford 150 quid a month, you probably can't afford to day trade. And I say, no disrespect intended. We all start somewhere. You're probably better off just saving up. Get on the internet. Google is your friend. Watch a few YouTube videos. Paper trade on something like TradingView for free whilst you're saving. Start with a strategy. When you come, you know, when you've got enough, maybe $400 or $500 that you can afford to spend on the education, then come back and take the education. Continue trading in a paper trading account, simulator account. Like I say, you can do the free trading on TradingView. It's not the best, but it's a start. If you're at the start of your journey, then it allows you to start with charting for free. Learn charting. There's a whole bunch of material out there, even on my YouTube, that for free, that you can actually go and start learning. But if you've not got, I would say, because I'm going to be starting, probably starting today at the bell, I'm going to be starting a small account challenge, and it's going to be the smallest account I've ever had. So I'm going to be starting with $2,500, and I recommend at least $3,000. That's a bare minimum. $2,500 to $3,000 at a bare minimum. I do recommend, realistically, $5,000 in your account to start. If you've not got $5,000, and it sounds like, you know, balking at $150 a month is you only need, like I say, it's 3 months and is usually sufficient for most people to pick up the, and you get access to the Discord as well for that. But it's usually enough for people to pick up the strategies and the knowledge base to then use that and practice that. And there's a whole business plan as part of that as well. But practice is the key. You know, you can watch me on a daily basis and pick up what I'm doing. You don't have to take the course. You do a lot of research. It'd probably take you a few months to do it the long way around. What I've effectively done is condensed it all into one area, presented it in a easy to digest format for you to actually then go out and start applying those strategies and techniques. And if you get a good simulator with real-time data, you're going to be paying about 100 quid's worth of subscription fees a month for that. You're going to want to subscribe into something like Benzinga. Even with a discount, you're going to be paying 100 quid a month for that. You're going to be then looking at maybe journaling your trades. You can get the freemium version of TraderView, but let's say you're an active trader, you might be paying another 30 quid a month for that. You're going to be, you know, all these little things add up. So just do a bit more research. Like I say, you might want to look into swing trading or crypto or options or, you know, I don't believe I'm saying this, maybe even Forex. The cost to entry is a lot lower, but you probably lose your money. Just don't put money into it that you can't afford to lose. I'm looking at Rdbx, not really for me. Verona Pharmaceutical, it's interesting, but it's not. It might be more interesting with a bit of volume. I think that's probably what's missing. The volatility is not there. We're getting the moves, we're getting good range, but the volatility is not there for me to be jumping in and trading it right now. It's all chestnut. Applied DNA science. Made a nice little move up to $5. Not great volume, but it's just a former runner, so I thought I'd take a look to see if it's got any additional catalysts. Hey, Alphabet. Oh, I thought you'd gone breaking. I just misread that then, El Puno. I thought you'd gone Breaking Bad on me when you said you're making on ETH. I just read it quickly, and being dyslexic as well, I thought you was making ETH. You know, but you're going all Breaking Bad. Right, APDN. Let's have a look at you. August 23rd. That's 2 weeks from now. Corporate statement. Couple of analyst ratings. Nothing really. I mean, it had a really good day on Friday. No, really good day on Thursday, and one on Tuesday. So Applied DNA is moving up. No specific catalyst. It's got a good range on it though. Looking like 30-cent range on a single bar. What was my pick watcher on my live? Huh? In English? Hello, Morris. What strategy do I recommend for swing trading? It entirely depends on your on the stocks that you're that you're trading, and of course your own personal disposition. There's a lot of different strategies that you can use. If you're trading this time of year, it's not too bad for swing trading because of earnings. You get quite a lot of movement, so you can. On the back of earnings, I wouldn't swing before the earnings tape prints. On the back of the earnings tape, if you see the market sentiment is good, then you might want to swing it to the upside. If the market sentiment's bad, you might want to swing it to the downside. But earnings can be a good catalyst. Alternatively, reversals are usually good for swings as well. If you're getting something that's extremely exhausted, either to the up or the downside, looking for a swing on a reversal is a reasonably good strategy as well. So it depends on your preference yourself. Personal preference always comes into it. I'm gonna high here. High is 54. Pulling back a bit. Any thoughts on the Nasdaq? Well, it's slightly down at the minute, and I think today's probably the last round of S&P earnings coming out. We're probably getting through the end of the the S&P 500. We're coming to the end of the tail end of all of those. Most of them have already dropped their earnings tape over the last week or so, last couple of weeks. So we're coming to the end of that. Really, tomorrow the CPI numbers could have an effect on the market. But right now, I mean, if we have a quick look at the Nasdaq, you can see that this is yesterday's close up here at just under 320.75, and we're down here below the VWAP as well. So we're downwards trending at the moment. It's looking a little bit weak at the moment, but that could turn around. So what was I just in then? IPDM. Top momentum stock right now, IPDM. Bonzo just hitting 45. Right, we're down at the VWAP, so maybe we'll get a bounce at the VWAP here. That's 36. I don't know what you understand. I don't understand what you mean by pick watcher. What's a pick watcher? Where do I get my CPI news from? Benzinga. I mean, it's freely available. I mean, there's loads of. You can go straight onto the Fed website and it drops there. But I get all of my financial news. Well, not all, but majority of my financial news, stock catalysts, stock moves, everything that I need to select a trade for day trading. I get it all from Benzinga. I've got the rolling news ticker in front of me in real time. I've got signals in real time. I've got 4 scanners up on different time frames. So that's where I get most of my information from is Benzinga. So let's test the half dollar. Let's see if it tests the half dollar here. Max viewers have in total or in a single sitting, like kind of in total or all at once, like consecutively. I've had 24,000 viewers across the course of the live. I think that's the most I've had, but in a single sitting, probably about 300, 400 at any one time. Like 400, I would say. We've got quite a few in today. Make yourself known. If you're new to trading, let me know. If you're an experienced trader, also let me know. If you've got questions, stick them in the chat. It's good to see that we've got a lot of people that are interested in trading live. We're in this for we took 5,000 shares. We took some profit after 10 cents. We're looking for a 10-cent move. We got that. So we got out exactly 10 cents after we entered. We're giving this second half of the trade, so this 2,500 shares, we're giving it a little bit of room. If it pulls back to break even, we'll just get out for break even. So we've made at least $125 on this trade. I have to watch this because I can't put stop losses. There we go, break even. I can't put stop losses in place pre-market. They won't execute. So I have to watch it pre-market, otherwise I might get caught in an algorithmic flush and lose the whole holding. I do look at the stats on a regular basis as to which streams are performing the best and which streams are working the best. Also videos and stuff as well. But yeah, we've got quite a lot in today. Let's keep it that way. So now we're looking for the break of the half dollar and a hold. Hold above. We've got in for the break of the half dollar. Want to look and we're looking for 65. Retest the highs. We got in at 55. Looking for the move up. That's 65. 63 on the ask there. Nielsen is an acquisition. The company's going to be going private, so that's an acquisition, Marion. Thanks, Nereus. It's warm, that's why. I'm in the vest and shorts today because it's just such a warm day. That's all right, Matty. This is not an easy profession. As contrary to popular opinion, perception, people think trading is easy. It's not. It's actually quite stressful. So it can wreck your head. I wouldn't short it, no. It's not going anywhere. You might get a couple of cents range, 10, 20 cents range or 50 cents range either way, but it's not going anywhere. It's going to be acquired. I think it's at $28 or something. It's going to be acquired, $28 per share. So Nielsen's not going anywhere. Well, this is pulling back. We got a bounce at the 540 before, so I'm looking for another bounce back up at 540. Otherwise, we'll get it. We've got a larger share size on this one. This is APDN. It's already up, what, 15% on the day? Well, 12% at the minute, but at the peak it was at 15% up on the day. This is a former runner from last week. Had some good runs, some big runs, like run-ups last week. So it does have form for being a momentum stock. Yeah, I'm still going to do the small account challenge, James. Just waiting for my other account to be activated. I got onto them last night and they said it'll be today, so it'll probably be at the bell today that I get that account activated, and then I can trade it after hours. I won't be trading pre-market or post-market with the small account. It's just not worth the risk, not unless there's a really, a good momentum move. Nereus, that's exactly what you should do. Is if you're making, let's say we're the low end of that. If you're making $2.5 grand a day, $5 grand a day is over $1 million a year, which is why that's my target. So it's about 1.3 million a year. But then after commissions, transaction fees, etc., it's about net about $1 million a year, approximately, which is what my goal is this year. And it's stressful. So what do I do with my gains on a monthly basis? So if I'm making 100 grand a month, then I take a third out for myself, take a third out for the taxman, and then I reinvest a third. So passive investing for the rest. So you've got some income, and I put most of that. It goes into. I've got a small portfolio that's not, but most of it is in my SIP. SIP is a self-invested pension plan, so it's like an IRA if you're in the States or wherever. Just going to reduce my exposure because this is not looking like it's going to break out anytime soon. I'm just going to get out. So if you're making decent gains day trading, that's great. But what you don't want to be doing is having it sitting around in cash, because if it's just sitting there doing nothing for you, then you're losing money. And B, you don't want to be leaving it in your account, because if you've got if you're making serious gains on your day trading, you're leaving it in your account, then the temptation is always there to go big when you get the momentum. And if you go big, the likelihood is you'll have a big loss, which part of my risk management strategy is I make gains on a monthly basis, and whatever profits I've made on a monthly basis, I take it all out to my day trading account and start again from the 30,000 at the beginning of the next month. And that way, the most I'm ever going to lose on a month is 30,000. And the fact that I've made substantially more than that in profit this year means that I'm already, to the good. I'm never risking losing like 6 figures on a given month. It can be done. If you've got a big account, let's say you've got $250,000 in your day trading account and you're trying to go big, you can lose that. With the leverage and everything else, you can lose that amount. It's so you need to be careful. Qnrx is moving as well. Let's have a look. Rdbx Labs, yeah, it's just gone green. I can see that. It's on the top of the momentum scanner, so thanks for highlighting that. APDN seems to be the one with the momentum right now. Pulling back. You never just remember, you're never going to get the whole move. You're either missing out on the top end of the move because you sell a little bit too early, or it pulls back and you miss out on it, and you give some back to the, you know, you actually get out for a loss or something at some stage. You're never going to get the whole move. So don't even try. Just get your profits, have your targets, take the targets. You can always get back in, take your profits. Nobody ever goes broke taking profit. Just remember that, guys. If you're in a profitable situation, bank it. You don't have to bank it all. You see, one of my things that I like to do is I'll take a position, I'll move up to my target, I'll take half off with a view to it continuing, and I'll move a stop to break even on for the remainder. So the worst case scenario is I'm getting half of my gains that I would have if I'd just taken everything off at the top end. But what that does is it allows me to hold that position, and I can add back what I've already taken off should it rally and should it break that target level and break those highs. So always be taking profits. You can always continue to add, and it just moves your average cost up so that you end up moving up with it. And pre-market, it's difficult because you can't put trailing stops in place. You can't put stops in place full stop. So pre-market and post-market are a little bit more difficult than it is in the open market. You can just take a position, put a trailing stop in place in the open market after the bell. It'll move up and then stop you out, and it might not stop you out at the full move, but it should stop you out for profit if you're getting in on a momentum stock. So Nielsen, just have a look at Nielsen for you, Marion, and I'll show you what's going on with this one. So Nielsen, it's actually moving up, but if you look at it on the higher time frame, it popped up on the news, and there's actually a meeting due to take place today, I think it was, and it was postponed, but it popped up on the news. And you see, it's not doing anything. I think $28 is the buy price for the company. Effectively, it's an acquisition that's likely to go through. So I wouldn't short this, I wouldn't go longer, I just wouldn't trade it. Unless you were in down here, there's no trade to be had. So the shares will get bought up now, and then they'll get delisted when they go private. Yeah, you know my policy super chip. So Rito's just popped up for some reason or another. So I put 116s. I don't trade these penny stocks. It's against my strategy. But if you like these penny stocks, if you're trading on a cash account and you don't have any leverage, then they can make sense because you can get a bigger share size with some of these lower price stocks. But the thing is, you have to get a bigger share size in order to, because the range is a lot lower as well, a lot less. So for you to get 10 cents on a $1 stock, it's got to move 10%. Whereas if you get 10 cents to get 10 cents on a $10 stock, you know, it's got to move 10. It's only got to move 1%. There's a big difference. Hey Dustin, you're very welcome. Just let me know what if you need anything. The Discord's very helpful, and yeah, the scanners are set up. I've got 4 scanners that I've got set up, and you'll see when you get to that stage, there's a section on stock scanning. But I've got 4 scanners. Well, I'll go through the 2 that you can see on TikTok, because you can also see them on Twitch and on YouTube as well. Excuse me. So this first one is just movers. It's the gap scanner. So this one is the gap scanner. It's set for, it filters out anything under $2, and it also filters out anything with less than 25,000 shares been traded. So they all I don't trade anything. Volume and volatility is what I'm looking for. I've got my filters on this one. It's $2 minimum and 25,000. It's the same on all my scanners. That's the only filters that I really use, except for the time frame. So this one is current session, and I will switch after the bell. I'll switch it over from pre-market to regular session. This one here is every 15 minutes. So this is momentum stocks that are moving up over the last 15 minutes. And then I've got a couple of scanners which are surging stocks based on a 5-minute time frame, and one is based on the volume in that 5-minute time frame. I've also got my signals, which I'm looking at volatility halts, resumes, etc., price spikes, high day series. That's in real time, and I've got my news alerts, which is rolling news ticker in real time as well. So that's how I've got my Benzinga's scanners all set up, and that pretty much sets me up for the day. I will look at a particular stock. So, for example, if I look at I click on Verona, and I pull this up, it just, by clicking on Verona, it brings up this this thing here. Straight away it says Verona shares are trading higher if the company announced whatever that is, met its primary endpoint in clinical trials, basically. I can take a look at what the key data is. So this is a 60 million shares outstanding on this. It's the float's probably not much different to that. It doesn't actually have the float details. Not very shorted. I can look for specific news other than what's happening there. So Verona shares trading higher for company announced primary phase 3 trials. So and good Q2 earnings. So Verona's moving up well. And that's just at the click of a button. I can get all this, can find out what the calendar earnings, when they are, where they were, etc. What the chart is, financials, any insider information. Having the financials there it's not really that relevant for day trading, but if you're swing trading, a quick scan across the balance sheet is very important, and it's certainly if you're planning on investing in something. But for a swing trade, this Benzinga, essential for me, essential. It absolutely is. It's probably as warm here in Dublin as it is on the deck of the ship that you're on, Alistair. So back to Verona. UAVS. Let's have a look at UAVS. I'll come back to Verona in a second. So UAVS, there's not much technical analysis to be done from an intraday perspective. There's no volume, no range. It's just one of those very low price stocks at the moment. You're going to have to look at the... there's just no range. No range at all. Have a look at the daily. So, even on the daily, 20-cent range over the last 4 or 5 months is not great, and over the last 2 months 10-cent range, 15. So there's not much movement in that in terms of trying to get much out of it. You have to take big size to take advantage of the move. It did have this one pop-up where it gapped up and then sold off all day. I don't know what that was for. I'm not going to bother looking at the catalysts or anything on that, but UAVS, personally, it's not a day trade for me. There's just no volume, no volatility. You need both, and this has neither. So, sorry to say. Crumlin is the most beautiful place in Dublin. It absolutely is, Nereus. You obviously know Dublin very well. It's actually, I'd say, second most beautiful place in Dublin. It's almost as good as Ballymun off Inglis. Technique. There's only two indicators that are leading. That's the price action and the volume. And I'm not using lagging indicators to alert me. I'm using scanners. So I've got real-time scanners on the signals, which gives me price spikes as they're happening, and I can take a look at that. If it then hits one of the, what I don't want to try and do is jump in something that's moving for 10 seconds. I want a sustained movement. Otherwise, it's just not reliable. I'm not trying to scalp something that's moving for 10 seconds. So you clearly know nothing about day trading technique, but you do you. They're the only drone company to be allowed to fly over people. That's fine. It doesn't mean I'm going to be trading it. There's no trade there. There's no volume and no volatility. Just because you like the company, invest in them. It's not a day trade. If you like the company, invest in them. I wouldn't invest in anything that's at 79 cents a share. There's a reason that a company is 79 cents a share. It's because it's a garbage company. The majority of these companies that I trade on a daily basis are garbage companies. If it's priced at 70 cents a share, it's not a good company. Categorically. You don't get good companies that are listed on the OTC markets, or that penny stock companies are not good companies. There's a reason why they're actually at that price. If they were a great company, they'd be priced at much, much higher. So, you know, follow the momentum. When it's got momentum, great. At the moment, it doesn't have any. When it's got momentum, trade it. But for me, it's not a swing trade unless you know that there's something coming out. It's got earnings that are going to be good. If there's a catalyst that you're aware of, then great. If you like the company, you do your due diligence and invest in it. I certainly won't be investing anything at 79 cents a share. You can, don't get me wrong, you can find some diamonds in the rough, new IPOs that are priced very low, and then they come up with an astounding bit of tech that rockets the price up, and guess what happens? They get acquired. So no company that's 79 cents a share is a good company that will last very long. They're either going to go out of business or they're going to get acquired. If they're a good company, they'll get acquired at that price. So I trade low price stocks for a reason, because of the volatility that's there. And at 79 cents a share, there was no volatility in that one. But you know, you do you. This is not financial advice. I'm just giving my opinion. I'm not a financial advisor. So I'm pretty much where I was at the bell yesterday, $275 in the green. So if we have another day like we did yesterday after the bell, I'll be a happy bunny, because we made 10k after pretty much first 10 minutes of the market open yesterday. So let's see if we can do a similar thing today. I'll just get myself some water. Back in a second. Do I think Megal is done? Let's have a quick look. This is IPO's Friday's IPO. So let's look at this on the daily. You'll see what I'm talking about here. Had a good. It opened at $50. Had a good run up all the way up to kind of 250, 240, 250. I think it was 235, 236. It gapped up yesterday and sold off all day. Today it's gapping down. So let's see what happens today. The thing is with these IPOs is that this could very well have a seesaw momentum. Just be careful if you're trading it though, because it's very low volume. You look at this on the 1 minute, there's nobody trading this, and there was very low volume. It moved from, it opened yesterday at $234. It closed at $117. It went as low as $86. So it was at like 250 at the high. So it did all of that on less than 1 million shares traded across the day. So a bit like HKD the previous week, this is a dangerous stock to trade intraday. It's very risky. You can by all means do it if that's what you like to do, but because of the lack of volume, low liquidity, you'll find the spreads are very big right now. The set spreads are only $2 between the bid and the ask. But yesterday I saw the spreads on this were as much as $20, $25. So that's a big spread. Just be careful with a stock like this with low liquidity, low volume. The moves can be erratic. So if you're going to trade it, fine, but you're not going to get much in terms of in the way of patterns for pattern breakouts because there's not enough liquidity, there's not enough volume to actually present on in terms of price action on the chart. But is it done? Probably not. It's going to be some volatility. It's going to have moves up and it's going to have moves back. But right now it's gapping down from yesterday. Redbox. Well, it's low volume at the minute. Let me just have a quick look. I'll see if there's any news on it today. Well, this was getting acquired by Chicken Soup. Redbox Entertainment. I'm just looking at... No, there's no specific news catalyst for Redbox at the minute. Not that I'm seeing, at least. Just analyst ratings. Technical score. 46. Alright, I'm just kind of looking for the last time we had a catalyst on Redbox. The thing is with Redbox, it is quite popular on social media still. The potential of a short squeeze is still there. But there's no specific catalyst here. Now, Bed Bath & Beyond that we saw move yesterday was over 100% shorted. Redbox at its peak before they announced... Redbox was about 70% short or something at one stage, but now it's 37% short, so it's still quite highly shorted. So there is potential for a squeeze, but it needs a catalyst to help it up. $4, if this goes back up towards kind of $6, $7, maybe. If it gets over $10, I think there could be a squeeze on, but right now, it's just low volume. We're going to have to wait for some volatility to come in. Ooh, bloody hell. No, Miyako is around for a treat, but she's asleep on the couch, so as soon as she wakes up, I'll give her a treat. Did well there, 40 minutes early. Didn't even realise. How did I do with? I'm still in the red with Ethereum, but I'm continuing to buy more every month. I bought some more last week. I'm losing my days. Yeah, I bought some more last weekend. I didn't buy a huge amount. Bought some more Bitcoin, and I spent more on XRP this weekend than I did on the others. But I'm still in the red on all of them. I was accumulating last year, and I was still accumulating. So I really went into the red with these in May, June, when the whole Luna debacle happened, and it went down to 17,000 or something on Bitcoin. Wasn't expecting that. Need to get back over 34 for me to be comfortable on Bitcoin. What is Bitcoin doing right now? So Bitcoin's not had a great day so far, not had a great morning. Bitcoin is at 23,200s, or low 23s. Ethereum's holding well enough over 1,700. Still over the $0.50 on Cardano at 52. And XRP is at 37, so Those are what I'm holding. Those are the coins that I'm holding, at least. If there's something else you want me to take a look at, I can pull it up on the trading view chart if you want me to. Let's have a look at these. So, Qnrx Holdings. This is one of those online pharmacies, isn't it? That the majority of people in the US have to go to because they get ripped off for medication. It's if you notice, you go to CVS or any other pharmacist in the States, the one behind the counter is the one holding the gun and in the mask. I'm telling you, it's a major scam. Well, I think Ethereum will outperform Bitcoin in the next few years. I don't think I think I stand to my guns that next year we'll see a six-figure Bitcoin, but I think Ethereum will outperform Bitcoin. I think Cardano and XRP. I'm losing a bit of faith on XRP, although I did have a bit of a top up at the weekend. I think Cardano will outperform both Bitcoin and Ethereum. But look, it's all about personal preference. I said, do your own due diligence, do a bit of research. Don't go for any meme coins. If you're looking at long-term holdings, don't go for any meme coins because they're not going to be around in the long term. IBM gapping down. Is today's earnings with IBM? No, they've had their earnings. Bosch & Lomb, Cisco, Ralph Lauren, Hyatt. They're all this morning. Warner Music, Roblox and Akamai, Plug Power this evening. No, I'm not seeing earnings for IBM. Let me just have a quick look. Why is IBM losing ground? I'll just find out for you, Fixie. International Business Machines. I'm not seeing any specific news on IBM today. Yeah, I can see the gap. I've got it up on here, but it's low volume, so it's down. Like, it looks like all relative, so it looks like a big gap, but IBM's got a very small range. So think if you're looking at this from where it was yesterday at the close, it was 132.63. It's down at 130.70, so it's dropped $2. So $2 on a $130 stock is not that big. It's down, what, 0.2%. So it's not that big of a move. It just looks big because normally you've got a very narrow range with IBM. It's a huge flow, so when it does have a movement, it's more noticeable. It's all relative, but I wouldn't say it's down huge amounts. Like I say, 2%, which by IBM standards is quite significant. About 0.2%. Just looking for something. So, and again, that could be algorithmic trades as well because it's very low volume. I mean, IBM on this class of stock, we've got 12,000 shares traded in the out of hour session, so that's not. I wouldn't get worried too much about it. IBM's a fairly stable company. Tends to move with the markets. I could have been trading this. Now I have to wait for an entry. don't get me wrong, I don't mind the Doge coins and the, you know, Shiba Inu coins and all that in their place, just for riding a bit of momentum. It's like the garbage coins, the same way as a lot of these stocks I'm trading in garbage stocks. The reason I'm trading them is because they've got momentum. I'm using the I'm trading momentum, not the stock itself. I don't care what happens to this stock. I'm not invested in it long term. Same thing with Doge and with Shiba Inu. And when they're making moves up, buy them and you know, trade them, swing trade them, or even day trade them. But so breaking new highs. So just got in there for a break of highs. I'm looking for 370. We've got 370 on the ask. I'm looking for 370 on the bid. There we go. We'll take 350 off that. Take half. Breaks $14. We'll add at 14.10. Low there is 72, so 72 is our exit. We'll just add it at 14.10. Locked in a few more bits and pieces in terms of profit. Break even is our exit. Well, I wouldn't say that's the top, but just lock in some more gains because we've got blue skies here. Well, we're just breaking 1420s, 1430s. Oh, which is why I locked in some more profits and can ride this up. Always get back in. So over $1,000 on that move. Got the big wick, you know, the up wick is usually an indicator of a pullback. It's an exit indicator. How long did it take me to be profitable? It took me about 7 months, 6-7 months of yeah. Took me about 6-7 months before I was consistently profitable. I mean, I'd have periods where I would go, you know, 3 or 4 or 5 days in a row, something like that, where I think it's clicked and I'm making money, and then I give it all back. And usually, what would happen is I'd make 3 or 4 days of consistent gains, and then I'd give all of those gains back from the 3 or 4 days in one day, and then some besides. So like I might go Monday through Thursday and have four green days and then give it all back and finish the week red. And that was a kind of a pattern that I was finding, you know, 3 steps forward, 4 steps back. And it was so frustrating to start off with. But when I eventually turned the corner, and the big thing was risk management. Getting my head around the principles of risk management was the big thing. Right, was you in that one, Yella? I hope you was in that one. I'm going to wait for the break of the $0.50 now, because we might get a set of devil horns. If this moves up to 1440 and then pulls back again, we've got the devil horns. So we might get a set of devil horns here. So I'm just going to wait for the break of the $0.50. And this is the problem with trading pre-market, is the volatility. You know, there you go, there were devil horns there. If that doesn't fill that wick, 13.38 top, but we're over $14, Marianne. We're in. Not sure where you're going with that. I mean, 14.38. Okay. Yeah, we're getting. You know, we've got the indicators for the pullback. It's not. I don't think it's done, but we can come back to that. Not a lot of. To be fair, it's not a lot else moving right now. So let's have a quick look at the markets.